Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock with news American investors have taken fright again. But first, a new report out overnight says that globally, labour income has fallen almost 11% or $3.5 trillion in the first three quarters of 2020 compared with 2019. But the support excludes income from government measures. Given the annual GDP of the world is $80 trillion, the hard knock to worker incomes will take nearly 6% off that in 2020 and severely crimp demand. And the clear resurgence of the pandemic in the US and Europe is telling markets we're a long way from beating the disease with current policies. Wall Street has taken fright again and is down sharply. And the US Fed officials testifying in Congress called for more fiscal support. They said the American economy is in need of more government spending to avoid a pandemic relapse to their economy. That support is unlikely to come from this Congress, however. However, overnight there was a series of flash global PMIs released for September, and they were generally positive. The US factory PMI expanded at a similar rate to August at 54. Their services PMI is expanding very similarly, but those surveyed aren't especially optimistic it will last. And the size of China's grain shortfall has been revealed in August customs data there, and that was released overnight. They brought in more than 1 million tonnes of corn in the month, up 12% from the previous month and nearly 5 times higher than the volume recorded in the same month last year. Purchases at this level distort global food prices, and that is likely to extend for a long time yet. In Australia, new budget rules are about to be unveiled, allowing small businesses at risk of collapse to trade while insolvent in a US-style bankruptcy status. That will help some of them recover, they hope. In New York, the S&P 500 is down more than 2.2% in early afternoon trade and another large retreat. US Treasury 10-year yield is up 2 basis points to 0.68%, but the price of gold will start today down sharply by a large $51 an ounce to $1,855 an ounce. Silver is down a massive 7% overnight. Oil prices have inched up in a minor way, now just on $40 a barrel in the US, while the international price is marginally firmer at $42 a barrel. And the Kiwi dollar starts today lower again at 65.4 US cents, another 1 cent retreat. We are now at a 1-month low. Against the Australian dollar, we're also soft at 92.4 Australian cents, and against the euro, we're definitely softer at 56.1 euro cents. That means our trade-weighted index is now at 69.1. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.